How many times have you done this, Jeff?
Once or twice, yeah.
Welcome to those of you joining this morning or this afternoon if you're based out east. I'm Laura Buehler. I'm the Executive Director here at C100. Thank you so much for spending the hour with us. We're going to give a few minutes for the rest of our attendees to join. In the meantime, say hello in the chat. Tell us who you are, where you're calling in from. We'd love to hear from you. You can select to announce that to everybody joining or just the panelists, but we'd love to see who's on the line. Welcome to those of you just logging in now. Thank you so much for joining. I'm Laura Buehler. I'm the Executive Director here at C100. Please introduce yourself in the chat. Tell us your name and where you're calling in from. We would love to get to know you. I see some familiar names dialing in. Thank you so much for spending the hour with us. We're going to get started at 5 minutes past the hour. Hi, George. Hi, Barry. Hey, Kurt. Harrison, Nasir. Hi, Christy. Good to see you again. Christy calling in from Saskatchewan. Hi, Irv. Great to see you. Robert, Riley, thanks everybody. Some of you are just introducing yourself just to the panelists. You can also introduce yourself to all the other attendees if you select all panelists and attendees, but it's your choice to do so. And for those of you who just joined, again, my name is Laura Buehler. I'm your host. Welcome. Thank you so much for spending an hour with us. We're going to get started in exactly 2 minutes. Feel free to introduce yourself in the chat. Tell us where you're calling in from, and we're looking forward to a great discussion today. Hi, Anthea. Hi, George. Hey, Luke. Lots of familiar names, not faces yet. Good stuff. And we'll get started in a little less than a minute. Waiting for these last folks to give them a chance to join. Helen, hello. Helen, Canadian in Switzerland. Wonderful to see Canadians dialing in from all over the place. Okay, it is 10:05 on the West Coast, 1:05 on the East Coast. We're going to get started. Welcome. Thank you so much for joining us this morning. Again, my name is Laura Buehler. I'm the Executive Director here at C100. If you're unfamiliar, C100 is a member-supported nonprofit headquartered in San Francisco, California. We have members across all the major technology hubs of the US, Canada, and beyond. We aspire to be the preeminent global community of Canadians in tech and are committed to supporting, inspiring, and connecting the most promising Canadian entrepreneurial leaders through mentorship, investment, and talent. Our members, which include individuals, many of you on the line, and organizations, include some of the most ambitious Canadian founders, operators, and VCs. If that sounds like you and you're interested in supporting our mission as a member and participating in our in-person program when the COVID pandemic is behind us, please do head to the C100 website and consider applying to join us as a member. It supports our work and our unique role in the broader Canadian ecosystem, but more importantly, it will be invested back into supporting you, the Canadian, having an impact. Today, it's our honor to host a critical discussion with one of C100's members, Jeff Booth, who is a renowned Canadian entrepreneur, investor, and community leader. He has recently written a book entitled The Price of Tomorrow: Why Deflation is the Key to an Abundant Future. And we're really looking forward to this conversation. We will be recording today's session, and if you missed any of the prior ones, they are available on the C100 website at thec100.org. We've discussed the themes ranging from access to capital, adapting your business plan for recession times, team crisis management, and many other topics. Today's conversation is directed at anyone who has an interest in the economy, in policy, and of course, in our abundant future. For housekeeping, if you've just arrived, please do introduce yourself in the chat. We're going to be opening it up to Q&A throughout the discussion, and that actually is in a different area. At the bottom of your screen, you'll see a little bubble that says Q&A. So please do enter your questions in that bubble. The C100 team will be helping to curate those questions for the session. You can vote up the questions of other people as well if it's a question you'd really like to see answered by Jeff. And we will actually find you and unmute you so that you announce your name, you can announce your firm, and then if you don't mind, to help keep things moving, please read your question as shortly and sweetly as you wrote it. It is so important that we are able to get to everyone's questions. So without further ado, I would like to introduce the person we've asked to moderate this conversation. His name is Paul Cubbon, and Paul is, Paul's online. He's the Assistant Dean of Innovation and the leader of Innovation and Entrepreneurship Group at the Sauder School of Business at the University of British Columbia. He has an industry background that includes 10 years at Unilever, including a pioneering role in the development of a global innovation system. Since 2000, Paul has committed himself to designing innovative and applied learning experiences in marketing, communication, and technology entrepreneurship. In more recent years, Paul has expanded these venture startup programs across the campus and beyond credit courses to support science researchers in finding product market fit and venture creation. But how we know Paul is that he's the leader and academic director of Creative Destruction Lab West, which is, if you're unfamiliar, one of the most exciting programs to come out of Canada, now has chapters really around the world, including here in the US. And he is partnered with Creative Destruction Lab to be a really critical driver in the community of Vancouver to advance entrepreneurship and the innovation economy there. Paul, welcome. Thank you so much for taking the time to do this with us today. I know I've given a bit on your career background, but if you don't mind just telling us where you're calling in from today and how you know Jeff, and then I'll have you introduce Jeff and kick us off.
Thanks very much, Laura, and welcome everybody. It's a pleasure to be here. I'm calling in from Vancouver, about one block from the beach in Kitsilano, although I'm in Zoom lockdown like the rest of you. Thanks for the very kind introduction. I'll briefly provide the segue of from CDL to Jeff. I mean, just as you said, CDL's had a big impact. Just for kind of clarity, it was founded at the Rotman School at the University of Toronto by my good friend and colleague Jay Agrawal about 8 years ago. And I think what's important, just as background there, and why it links so well to the C100 group, is that Jay was really trying to understand why, despite the talent in Canada, both the scientific talent coming out of university labs and the business talent, why didn't we build more kind of world-class, high impact and large companies. And so, you know, the setup of CDL was really to try to fill a gap there and create this marketplace for judgment. And the marketplace for judgment was coming from people like Jeff. And so when I saw what he was doing, and he started it, as I say, 8 years ago at the University of Toronto, I approached him about 5 years ago to expand it out, and subsequently after UBC, Calgary, Montreal, Halifax, and then subsequently, as you mentioned, kind of well, Oxford, and then this year Paris and Georgia Tech and Atlanta. And so the intent here really is to take science out of labs and build high impact companies that can scale globally. And as we do this, put Canada on the map. So if I want a marketplace for judgment, I need people who have built businesses and can give that judgment. And so as we were building out the community in Vancouver, very quickly, probably kind of in the first handful of people I got to, I went to see Jeff, and he kindly gave me 15 minutes in his office, and I managed to persuade him to reallocate some of his time. But it wasn't so hard because he's a pay it forward guy. And the issue I think here was, is this the best use of my pay it forward time? And that's kind of what we've done. And so the last four or so years, you know, I've spent more and more time with Jeff, and it's been really fantastic. I think it's one of the rewarding things is we're all busy people, and if you can actually align around a shared mission, you can get enormously powerful things done. So that's what we do. The other thing I would say is an increasing number of CDL companies end up going to C100's 48 hours in the Valley. I think we found that that's a really kind of a logical pipeline for some of our alumni companies and a flow through there. So that's pretty neat. So that's kind of the segue intro. And I'm going to go straight on to directing the mic to Jeff, if I can. And so, Jeff, I first heard you give a talk on your book, The Prize of Tomorrow, what seems like decades ago now. It was back in November 2019, and the world's changed a bit. Since then, you've given many talks, many interviews and media shows and podcasts on the book. And you know, people I can see a lot of the discussion on social media channels and so on. So before we get into the talk, I'll make you blush, but I'll tell you that people, you know, they really should go out and get the book, whether it's on Amazon's Kindle or hard copy or on Audible, because it's going to stimulate them, I think, and really it's got a great relevance today. So I know you might not plug your own book. I'm going to plug it for you. But fundamentally, you pointed in your book to a broken global economic system that would be exposed by a trigger event. I'm thinking back to November last year when as I say, when I first heard you talk about it, and you know, COVID-19 seems to have become that event. So I'd like to use the thesis of your book to probe your thoughts on the practical implications, both for governments and business leaders and entrepreneurs, the people on this call. So I'm going to take you through a series of questions, and I know if you don't like the question, you'll answer something different anyway.
Training, yeah, sure.
Yeah, sure. So Jeff, although some people on today's webinar will know you, others will not. So by way of introduction, perhaps, can you start off by telling us a little bit about yourself, your entrepreneurial background, you know, through to what sort of companies you're involved in now, and that would be really helpful as by way of intro.
Okay, I'll try to go fast here because, so most people probably know me from founding and leading BuildDirect over 19 years. Through 3 different pivots, that company ended up with about a $500 million market cap at one point. And so just been at the front seat of technology for a long time. I'm now on boards of countless technology companies and an investor in quite a few different technology companies. So I have a different view or I have a unique view of where technology is going, a pretty broad view of where technology is going, and some of the work that I do with you too, Paul. You see what's coming. That's probably good about me. The reason I wrote the book is because I saw a structural change coming to society that wasn't being addressed through the current economics, and nobody was talking about it. And I worried if you played that forward, what it would look like for my kids and for the next people, the society after us, what it would look like. It was something I was talking about for over 10 years, and I just finally realized just to put my own thoughts down, I need to do this and put pen to paper. And so that's why the last thing I need is book sales or more people. I needed, it was a message I had to get out. So that's why I wrote the book.
So it's a personal passion piece, but even before COVID-19, I mean, you know, I think back to Davos and meetings like that. You were getting, you know, here's you, a Canadian entrepreneur, and you were getting approached from high-profile, influential people around the world and saying, "Hey, you're onto something." Maybe you could say a little bit just about kind of why it seemed to resonate, kind of even before we get to a pandemic crisis.
Well, let's say what it is first.
Yeah.
And so technology creates abundance, and technology makes things more efficient, and that means that it makes things cheaper, abundant, and more efficient. So economics is about scarcity, not about value. And a lot of people confuse those two things. And a good proof point is this: the air you breathe might be the most valuable thing in your life, but it's free because it's abundant. The only place you can charge for air is underwater. So technology creates abundance throughout. You can see it in your phone. You can see it in all of the free things that are on your phone, from your camera to your maps to your Google searches to everything else. And you can see that, and that is moving across society at a blinding speed. So it begs the question, if that's true, and we see, in fact, the monopolies that are created today are actually created out of that abundance, right? So we use Google, right? We use, and Amazon keeps getting lower and lower costs, and then they add free movies to our Prime membership. And so a bunch of the technology value is created by a network effect on essentially bringing that to society. But that's just starting. Looking forward, what's going to happen with AI and a whole bunch of the different industries as we move from cell phones to across industry, then it should be bringing prices down and a more abundance to society. And if you said that to somebody right now, with real estate prices going up and the cost of food going up and everything else over the world, they'd go, "That's not the way my world works," right? And so if you dig into that, you realize that the only reason prices aren't coming down is central banks are doing everything in their power to prop prices up, create more and more debt that can't be repaid, and then bailouts to be able to prop prices up, because we've lived in an inflationary world our whole lives. And we can't see that the best thing in the world might be a deflationary environment. But it's hard to, just like a business gets stuck and can't see a new paradigm, it's reasonable to think that policymakers get stuck and can't see a new paradigm. So that's what I talked about. That's what I talk about in the book. But to even investigate that deeper, investigate the truth of what I just said, you would have to investigate what is deflation, what is inflation, right? And deflation, simply, take out the emotion from it and just to investigate what it is. And deflation is when the value of your money gets is higher because goods and services get cheaper. And inflation is the opposite. The value of your currency goes down as goods and services get more expensive. It's not good or bad. Each outcome, whatever happens, has different winners and losers. So in an inflationary environment, holders of assets win, as prices of assets get stimulated up. And in a deflationary environment, holders of cash win as prices go down. So if you have governments, so instead of using a word, we're trying to target inflation, if you had governments saying, we're trying to destroy the value of your currency, you might have a different response from a community, right? But you can see all of the problems baked into that model, essentially deflation is a more powerful force than any inflation that governments can create, besides debasing their currencies.
So what you've got is, you said that it's not good or bad, but implicitly the way the governments and policymakers have tried to kind of rein in inflation and avoid deflation suggests that they think that there's an optimal point. How do you see this conversation kind of changing, and kind of, you know, what's going to lead to one government or another maybe kind of breaking out of the historical paradigm?
Well, if technology is deflationary, right, and it is, that's not an if, that's a fact. And if it's going to move across a whole bunch of industries, then there's nothing governments can do to stop that from happening. Prices will go down, and benefits to society will increase. The only thing they can do to slow it is keep pulling demand forward by creating more and more debt that can't be paid back, which is arbitrarily increasing, dividing wealth. It's taking from middle class and poor and giving to asset owners through that arbitrary exchange, especially if you break capitalism to do it by having to force bailouts. So normally in an environment, so think about today what we have. You have, now forget the COVID. COVID was just a trigger event. This was going to happen anyways. This has just accelerated the trend to technology. But think of some of the consequences. So 10 million users on Zoom going to 290 million in a month and a half. Going to 300 million in a month and a half. 290 million people aren't going back into commercial real estate. Some will, but if those people don't go back into commercial real estate has to fall, right? And governments can say, we're not going to let it fall by bailing out the sector and giving rent guarantees and everything else to prevent it from falling. But then they actually have to go and give more to society through UBI or something else to pay for the artificially inflated prices that they created in the first place. So you create all sorts of warped incentives by trying to not allow free markets to work.
So government's kind of early reactions to the economic impact of COVID-19 have actually played to this old paradigm of interventions and subsidies. So what do you see kind of being, you know, if this doesn't trigger a kind of a change, what, how do you see this evolving or playing out?
Well, I would say that because 2008, we papered over 2008, right, and added that much more debt to make the problem that much worse. So we can expect if governments can get away with it again, asset prices will run away again. Stock prices, the stock market right now doesn't represent the real economy. The stock market represents devaluing currency, printing money to artificially inflate stock prices and asset prices, and that's the entire market right now is responding to that artificial inflation. If that happens, the people with wealth, owners of stocks, owners of housing, are enriched, and people without wealth are impoverished, and so you essentially divide society by that action. But with the amount of debt in the world today, $185 trillion of new debt in the last 20 years, effectively to stop what we're talking about, to stop prices from going down. It's really pulling forward, that pulls all demand forward, and it looks like you're doing well until you have to pay that debt back. Right? And then the debt, paying that back, the debt becomes a drag on future growth. So you're borrowing from tomorrow to pay for today, and you have to tax at a totally different rate, which slows business growth later on. That debt, if you allow deflation to happen, can't be repaid. Right? Actually, I don't think it can be repaid anyways. So because if you let prices go down, then in real terms, the debt explodes in value. right? And it explodes in real terms, and it can't be paid back. So you have governments pulling out all stops to stop that, not knowing that they're actually creating the demise of the entire financial system by doing it, right? So they're driving society to break, and our politicians kind of are, you can't even hear both sides yelling at each other anymore because both sides of the aisle are actually on top of a system that they don't see that there's been a structural change. So the solutions are all coming out. The solutions are all on top of what has existed forever. But it's no different than Kodak not seeing the digital camera. It's no different than Blockbuster not seeing Netflix. It's the rate of technology change is so fast that if the best business leaders can't see it, why would we expect government to see it? So it's produced a structural change. If we allowed the structural change to happen, it would be, no matter what, it's going to be ugly on the way through. But if we had actually had a reasonable discussion about a first principle, and then a path to be able to allow the structural change to happen, society would be better off.
So Jeff, building on that. I mean, one of the rallying cries of governments at the moment is to focus economic recovery on quote unquote, shovel-ready construction projects. And I know you and I have talked about where investment should take place, in physical infrastructure like roads and rail and pipelines, or whether it should be in technology, in backbone and infrastructure. So you also talked about a bit earlier today about there being winners and losers. So is there an opportunity for leaders, both in government and in companies, to be proactive on their response here and effectively create a winning position relative to others that maybe are slower, a bit like your Kodak or your Blockbuster moment?
Yeah, I would say in this type of environment, for a lot of people that are on the phone that have businesses and everything else, if you realize the big game that's being played, it's a coin flip of what's going to happen. If governments keep doing this and they get away with it, then we're going to have some inflation and then massive devaluation of currencies. And so if you play that scenario forward, and you say, what is the likely result? You can see where to put your money, right? And what to invest in. If you play the other scenario forward, that we have to deflation, then you want to hold it. So in one scenario, your cash is going to be very valuable, and you can buy assets really cheap. In the other scenario, your cash is going to be worthless. And so that coin flip of what governments do, we pretend we're building these businesses and that's not true. There's a lot of businesses that are valuable, but the bigger fundamental thing that's happening right now is something that's outside of your control. So I would say understand these things so you can understand where to personally put your money and have some safety in your portfolio, and in a business strategy, make sure make sure you can manage all outcomes. From what are the probabilities, what you said would happen, and Paul, to your question, is shovel-ready projects used to work because building faster, more lanes on a road and building bridges produced an economic benefit of not just the construction jobs that created it, but when we traveled to work back and forth on those roads and you reduced travel time, you created a longer term economic benefit. So some of that debt that governments used to borrow from tomorrow to pay for today produce a lasting impact to GDP. Today, as far as there's going to be some shovel-ready projects that will do that for sure, but the superhighways of the future are all digital in nature, right? You can see that everywhere. So instead of trillions and trillions of dollars in the U.S. and hundreds of billion dollars into Canada to prop up the existing market. Wouldn't a better solution to be put a bunch of that money into where the market's going? Right. Put a bunch of money into solar, put a bunch of money into industries that you know and are future digital in nature, because that's where you're going to get the best economic benefit longer term.
So building on that, if you were advising kind of provincial or state or federal leaders at this point in time, you would be encouraging an acceleration of investment in technology.
Well, yes, I've actually been asked to speak to the House of Commons on Friday. So yes, I think that is the place that you'd want to invest in.
Well, this is a nice segue to the question I want to ask you now, because I think it's easy for people to become depressed by some of the issues that were highlighted in the book. It's kind of like, this is all happening to us, and yet there's the classic paradox of the current situation. I think the saying is don't let a good crisis go to waste, and by revealing what you kind of said was inevitable anyway, our current pandemic has really accelerated the need to address something rather than brush it under the carpet. So although one could get depressed by things, ultimately your title or your subtitle, it provides a message of hope, a more abundant and equitable future. So maybe as we come towards the last few minutes of the formal part of this interview before the Q&A, can you explain a little bit more about kind of why you're hopeful?
Well, I think so. You can't design great solutions until you understand the problem you're trying to deal with, right? So the problem that the governments are asking all over the world, not just in the US, not just in Canada, is how do we get employment rate up? At all costs? What they should be asking is how do we design a better society that doesn't need that much employment, right? Because the inevitability of what technology does is it makes things more efficient and reduces the amount of jobs needed to do it. And if you actually accept that inevitability, it's actually not a bad thing. It's a good thing, right? Nobody wants to give up their phone with all the power that has. It's to get a whole bunch of jobs back that were for a different time. It's a good thing. It's the way that we're running a system is creating a bad thing. So so I would like to have that debate. I'd like to have the entrepreneurs are designed for this, right? Every single entrepreneur I work with is trying to use technology to make the world a better place, right? And entrepreneurs, what they do is they step out of current thinking and they say, what would it look like with this? And if they're right, they design great leadership, great entrepreneur. They design where the future is going. So I see this as an opportunity for leaders to emerge and paint a really great picture of where things go. You can't paint that picture unless you understand the first principles, right? What's wrong with existing, but then you can start to paint a picture of a transition that looks a lot better for society.
Good. Well, look, for our participants on the call, you're getting the preview of what the House of Commons gets on Friday. So you're kind of in an elevated position. But it's so maybe as I come to my last question for you, if I can, Jeff, is what's your call to action, and what do you want people to do? I mean, you're going to make a call to action to government leaders in Canada on Friday, but for the people on the call, as business leaders, as entrepreneurs, and as individuals and family people, and to today's youth, you said you couldn't see, you wrote this book because you didn't want the future for your children to go to waste. So what's your call to action to any one of these constituencies? I'll let you pick where you want to focus that, and that's my final question to you.
The call to action is if this rings a bell, spread the message. And get involved. it's too easy thinking the problems are bigger than us to put your head in the sand and let things just go on their merry way. That I can tell you is the wrong solution here. It will not end. It won't end well. You can debate the solution. You can debate what I've pulled together in the book. Happy to have that debate. But at the end of the day, if technology is deflationary and it's moving across industry, I see no choice than having a real debate about how we create a better model to accept that fact. And so I'd love people to get involved in that discussion. Take it to others they know.
Well, look, Jeff, personally, I've really enjoyed our time over the last few years. And although we spent a lot of time on Zoom recently, I do look forward to when we can actually share a kind of a beer together in person again, kind of in the not too distant future. But this is a lovely segue to hand the mic back to Laura and to kind of take you into Q&A with the audience. You've invited discussion and let's go forward with it. So thank you, Jeff.
Thank you so much. Jeff, actually, I have a question for you to start off, but I'd also just invite folks, if you haven't typed out a question, just raise your hand and we'll call on you to comment, debate, or ask any question that you would like, of course, pending that it's on topic. But I've got a question for you, Jeff. So you mentioned this idea of a coin flip, of if fiscal policy changes, if governments decide to go the way you're recommending versus if they continue the status quo of printing money and propping up the valuations of real estate and health and education, all these things that are causing, false inflation. You called it a coin flip. And so for those of us who are trying to plan for the future, whether that be personal finance or even for your business, are we really dealing with a coin flip here? Is it really 50-50 whether governments are going to move forward with your recommendations here, or if they're going to choose deflation as a future? What actually is the likelihood that things change?
Okay, I don't wish what I'm about to say, but I think the likelihood is low. I think that the same thing that drives Kodak off the edge is relying on their former business. Same thing, Blockbuster. Same thing, and it'll be the same thing in governments. And here's an interesting question: if you owned the best company in Venezuela before the government of Venezuela made the currency worthless and had 1.8 million % inflation in a year, is that worthwhile anywhere else? Right? And so at some point, if we stick to these policies, that's what it looks like. And so where do you put money what do you do with your money that it is safe from those policies? I can't believe I'm saying this on the call, but I would put money in Bitcoin because gold used to be tied to.
You would or you wouldn't?
I would put money in Bitcoin.
Would. Okay.
As a hedge against that, because gold used to be a hedge against currencies getting out of control. It's no longer pegged. Gold has a market cap of about $8 trillion, and it's not because of jewelry. It's because people believe it's a store of value against currencies, but it no longer pegged to currencies. Bitcoin has a market cap of 120 billion, and I would bet it's an asymmetric bet that governments are likely pegged to something to like Bitcoin on the other side of this, whether they want to or not. So I would be making sure I had some pass out of this. For the short time, the U.S. dollar will do well because all over the world trade is denominated in US dollars, and there's a race for US dollars out of every business all over the world, and a lot of those countries can't print their own money, so they're doing whatever they can to get to US dollars, which is making the US dollar stronger and other currencies weaker as a result. So that's a short-term impact. But if you keep on US dollar, the Fed will go negative interest rates, right? And just like we saw in oil last week, at some point at some point things break, and those breaks can go on for a long time. But when it breaks, it's harsh. So I suspect that's it. I suspect that's what governments will do, and that's where it's going. I wish I didn't have to say that. Because that creates a disorderly unwind for society. I wrote the book to try to create an orderly transition, right? And what we just talked about, pretending this works creates a disorderly unwind.
That's thank you for that. So the first person we're going to unmute to ask a question here is Bill Bearable. And before you ask your question, Bill, if you don't mind just telling us who you are and where you're calling in from, it'd be great to meet you.
Yes, hi. I'm the CEO of Praxis Spinal Cord Institute here in Vancouver. We're an institute that develops solutions for people with spinal cord injury. We've got partners all over the world, including in the Bay Area. One of our board members is from UCSF, Zuckerberg Hospital, Mike Beatty, who's the head of the spinal research program there. And Graham Creasy, who's at Stanford as well. My question, and we do knowledge translation, but my question is really around technology. And do you foresee that the development and the proliferation of new technologies will help to support an orderly transition? As you say, it's creating a lot of jobs, but as time goes on, our birth rates are declining all over the world, with the exception of Africa, India, and parts of the Middle East, but even they are starting to decline slowly. And China's at 1.6, Japan's at 1.6. Later this century, do you see that the technology will help us move to an economic growth model that doesn't depend on population growth? And could the two of them work together to support an orderly transition to a different kind of economic growth?
I think that focuses on the wrong question. And demographics used to be the big thing in economics and markets, as you point out. Now the big thing is technology, and it's going to be exponentially deflationary from here. So today, and just if you looked at any one of the examples, automotive sector, today you have both the existing industry, all those jobs and everything else, and a new industry being developed with self-driving cars. You have both costs. The new system, as self-driving cars come out, and it changes an economic model to a SaaS type model, and you can have a car any time you want on a SaaS type model. It changes how many cars are needed. It changes insurance. It changes parking. It changes. It creates abundance. All the drivers aren't needed. That's one tiny example of what's happening with technology in one industry. It's happening across the board, and so it's exponentially deflationary. What we saw looking backwards, and all of the printing to be able to stop prices from falling to their natural order, is about to get a lot worse. Or better, depending on how we design the system.
Yeah, great. Thank you. It's kind of scary stuff. The next question is George O'Neill. And George, let's see here. So just introduce yourself before you ask a question.
Hi, Laura. Thanks very much. George O'Neill. I'm the CEO of online real estate brokerage, nexthome.com. We're developing a platform to help people purchase real estate online. And we've been working on this for a while, so it's interesting. Unfortunately, COVID has accelerated our business case by years in just a matter of months. Good for use case, but unfortunately for society. But Jeff, very interesting thoughts, and I haven't read your book, but I will. But just wondering what your perspective is. How deep should the government reach in to help sort of large companies? CFL is in the news today asking for $150 million versus, Main Street businesses. I mean, there's a lot. I live in the beaches in Toronto. I walk down Queen Street. There's a lot of businesses that are going to close and never open again. Just wondering what your perspective is on that. Thank you.
Yeah. And there's the interesting thing, and I'm glad these questions actually address that. So in an environment where central governments are creating disincentive to save, right? negative interest rates, monetary policy that makes savings worthless, you wouldn't expect any companies to save money, right? So they become so you think about the bailouts right now, the airline industries and the oil sector and everything else. It's because the incentives are manipulated. So executives of those companies that save, the money gets worthless, and they fail in the markets because the markets don't value them as high because the incentives are created there anyways. And so then we hit a point like this that's just putting a pin in the balloon, and it exposes everybody, and nobody has savings to be able to deal with these exposures. And the government says, or every company says, I need a bailout, right? Which makes the entire thing worse again, right? And so it's hard to see the economic carnage that is created on Main Street, on big companies too, out of the policies that were designed to keep us pretending to live in this fairy tale. That's the truth, and it's going to be a hard transition because of that. But keeping those policies in place and doing it again, it's just going to be way worse if we get away with it this time.
Thanks, Jeff. Our next question is coming from Akilan Teva. Akilan, we're gonna unmute you here, if you don't mind introducing yourself, and then talk to us about what your question is.
Hi, this is Akilan Teva. I'm the founder and CEO of BizRing. BizRing, we connect real estate investors with homeowners and reputable service providers in the industry. We are across Ontario right now. And we are a startup company. Unfortunately, we are not eligible for many of these government bailouts, except the $40,000 loan offered in Canada. My question is, after this COVID-19, what's going to happen? Are we going to get into inflation or deflation? Because the stock market, it went down by 30% all of a sudden. Within 2 weeks, it came back another 20%. So there's a lot of uncertainties there. What is your take on, Jeff?
So we have a secular trend of deflation that is going to be persistent. If you have this much debt and you have to pay back the debt, it actually is more the taxes going up on and the debt servicing has to slow the economy in the future, even if you took technology out of it. So that's disinflationary. Add technology to it, it's going to be deflationary. It's going to be exponentially deflationary. So we're step one, add more debt to stop deflation, stop what's happening naturally with technology. Step two, decrease interest rates and keep decreasing them to zero bound to negative. Step three, realize that no matter how much debt it can't be paid back. Start bailing out sectors and taking it on the government's balance sheet. Step four, realize the money can't be paid back ever. Debase your currencies. Hyperinflation, right? Just like we've seen in Venezuela and everything, hyperinflation. And then after that, deflation again, right? So that's structurally what it looks like. And that's the government's response. That's what all governments around the world is a response. What I would say to a number of people on the call, I've been through multiple transitions of different times in different businesses and seen what worked before always immediately not work. And those are clarifying times for a business. If you don't get stuck in your existing business, and you can see if you can rise to another level, and if you don't get stuck in the fear, and you can rise to another level and say, okay, what does this look like, and how could something be totally different? It could be a totally different business, pivot, anything, to be able to say, where is the value created in a time like this? And trust me, there's a lot of value to create in times like this, tons of value.
Where?
Well, there's anytime people are hurting, right, at this level, solving their needs. If you just think about what How do you solve other people's pain? There's a ton of different businesses that can be solved. I think, short of one company I'm involved with, they're all setting records right now, right? And there's and some of those, it's been staggering how much success they're having, because they were designed to win in environments that took advantage of technology, made things more efficient, and everything else. And it's accelerating right now.
Thanks, Jeff. We've got time for two more. We're going to go to Sean and then to Charles. You know who you are, so we'll start with Sean. Introduce yourself. I think you two know each other, but if you could introduce yourself for everyone else.
Hey, Jeff, how you doing? It's Sean Longdon. I'm calling from Whistler. I'm CEO of two companies, Code in Canada, which helped H-1Bs move to Canada from expiring H-1Bs in the United States, and Global Talent Accelerator, which helped Canadian companies find tech talent from around the world, bring them to Canada, help them grow in Canada. Those two models have pivoted. I'm helping Canadians find remote work in the United States, where companies are still hiring, where I've got a good client base, and I'm helping Canadian companies filter through all the talent that they're getting resumes from to quickly find the best through the system that we built for the international talent that we used to filter through. So there's a good pivot. But the question is really around global impact of COVID. And you mentioned it, the phase 4 hyperinflation based on government debts and bailouts, which, you know, Canada has a better balance sheet than most and will survive. But when you think of the last round and the close calls with Greece and Italy and others, they're not equipped to do what they're currently doing. And Western Europe and other countries will fail and will have that hyperinflation. So the question is really, is tech enough to manage that round? And what are your thoughts are whether we're going to have to build on the flotsam like we did post .bomb, or what other alternatives are there?
Yeah, so when you have every government trying to manipulate its currency and reduce its essentially labor rate through currency manipulation, so let's just use China as an example. If everybody in China knows that they're going to lower the value of the yuan, then everybody in China also takes their money out of the yuan and puts it in our commercial real estate before that, or real estate before that happens, and the real estate goes up as a natural pressure. So no matter where the stimulus is happening, it's in a global system. And what happens on the butterfly effect, what happens on one side of the world, we're not insulated, right? In that same exact China-US example in global trade, Germany lent to Greece, changed the currency. Everybody in Greece had more money. They bought more from their purchasing nation. They bought more from Greece, which is an exporting, more from Germany, which was an exporting nation. And it's all linked together. And the banks of Germany were happy to lend against Greek purchasers until they were not. And then a reset's required. Instead of a reset happening, more debt was created. And because those loans couldn't be paid back, and then Germany's economy would fail. That interconnection is happening globally. And it actually doesn't, the problem it's gotten so big, Sean, is it's going to unwind. There are going to be currencies that are going to fail. And then those, and that unwinds the system kind of wherever it is. So that's kind of why I said, we're into a structural type of problem with too much debt, and that debt cannot be repaid already. If you could pretend it can be, and you could get away with it again, just the next one will be, the next unwind will be more severe.
Jeff, we're gonna actually try to squeeze in a couple more here. We've got a lot more questions rolling in. And so let's try to move through this next one succinctly if we can. The question is short, but the answer may be long. We're going to Charles Taylor. Charles, introduce yourself.
Hi, everyone. My name is Charles. I work for a company called Coral Protocol, here in the Bay Area. We're a blockchain basically making the tools that regulated financial institutions need to fight fraud and other forms of risk in a blockchain world. So Jeff, great talk. Thank you. And I posted my question here. Just curious to know your thoughts on the prospect of stagflation in the medium to long term. Just given that we know we're going to see a pretty pronounced output gap, and obviously the money supply is going to be increasing considerably, as you've mentioned. So just curious to know your thoughts on stagflation.
Yeah, I think it's more likely that it's going to be deflationary. Because I think the point we're at right now is addition of debt is pushing on a string, right? Nobody believes it can be paid back. So you're going to add that debt and the attempt to increase taxes to pay that back, which is going to slow growth, and add technology. And then every company is forced to adopt technology faster, right? Just game theory alone. They have to make their businesses more efficient. Making them businesses more efficient is the thing that's driving deflation and jobs out of the market. So I see a high likelihood of disinflation and ultimately deflation.
That's a great segue for our last question here from C100 Charter member Kurt Sigstead.
Hey, Jeff, it's Kurt. Again, thanks for joining on behalf of the C100, as Laura already mentioned. I just at a very high level, is a take. I know there is sort of the longer term issue we have to deal with societally, but is a shorter term message that we should be borrowing debt and investing in tech, and that being sort of a message to the investor, but also to governments, in order to create assets that people actually want to invest in and increase in value?
So yes, Kirk, and we're not going to be able to see each other in person until the other side of this, it sounds like. But so if you wanted to make the best investment, and you thought, just look at what's happening with technology companies right now. If you look at the S&P, if you look at the markets, most of the growth in the market, all of the growth in the markets, is actually dominated by the tech monopolies. Right? That's where the entire markets are. That is where the future is going to be in tech. And so but if you add that sum up, so if you just said that's in Canada or in the US, and let's just use Canada and the US as an example. If instead of in the US trillions of dollars going, and it'll be tens of trillions before this is done, going into support existing industry, if you took a number of trillions of that and invested in tech, you'd own this super highway of the future, right? You would accelerate the growth into what every country needs more, and you'd be exporting tech to the world, just like we're on Zoom right now in Canada, and Zoom isn't owned by a Canadian company, right? If you did it in Canada, same thing. But if you play that forward, if every country did the same thing, right, and invested more in tech, you're still driving the same thing. You're driving faster and faster, essentially job destruction, for the highest paying jobs. And globally, that means net job growth will not go up globally, and that means that we're going to be in a deflationary environment at some point.
Thank you so much, Jeff. Look, we did have a couple of remaining questions, but I'm afraid we just probably don't have time to get to them. We're at 10:59. We do need to end on time. I just want to thank you so much for your time. Both Paul and Jeff have volunteered this time with us. You'll all be receiving a follow-up from us later today with a recording of today's session, as well as a link to Jeff's book, which is available on Amazon. Again, it's called The Price of Tomorrow by Jeff Booth. Really compelling stuff. Jeff, thank you so much. To close us off, I thought you could just share a little bit about both of you, which local small business or charity you would like C100 to make a modest contribution to in gratitude for your time, so we can pay it forward to some businesses or people really helping on the front lines.
Well, thanks for doing that, Laura, and thanks for having me. Richmond Hospital Foundation for me.
Wonderful. And Paul?
The women's shelter, the Vancouver Downtown East Side Women's Centre, please.
Okay, wonderful. Well, thank you so much. We'll make those both in your name. Again, to the rest of you, thank you so much for being a part of this session today. If you're in the San Francisco Bay Area, we hope you consider getting involved in our regular membership program. Lastly, please do join us next week for another virtual roundtable. You can RSVP for that on our website as well. And keep an eye out for a summary later today from our team. Thanks.
Thanks so much.
Thank you.
Take care.
Bye-bye.